Hello everyone, welcome back to my channel. So this marks the end of the week number 13 in this Road to 200k challenge. This week was almost a complete opposite of the previous one because there were almost no trades that I had to do this week, so I had much less work to do, many less trades to consider, and so we reached the end of the week with a much lower amount of trades to input in our scoreboard, but we'll get to those later. Just to give you a brief wrap up of what happened during the week. Over the first 3 days, meaning Monday, Tuesday and Wednesday, the markets fell for most of that time, and even though the markets fell, the stocks and the options that we have in our portfolio here, they stood up quite well, with the exception of volatility, which came basically crashing down all the way towards the strike price of our puts, which, if you recall, it was $87 at one point even during the week. And as you can see right here, those puts that we sold on Monday, and at some point during those days the stock price even went a bit below the $87 mark, but it quickly recovered. But then over the remainder of the week it stayed around the 87 and a few cents above it, sometimes 88, closer to 89. But then, as you can see here, when the markets closed yesterday on Friday, they closed at 87.20, as you can see here. And so the option or puts that we sold expired basically worthless. But as you probably noticed, also American Airlines released its earnings on Thursday, on the next day, and so apparently those earnings came out better than expected by investors. However, under GAAP, under the generally accepted accounting practices, for those who are more acknowledged with accounting practices, there was still a loss, but a loss which was a result of extraordinary items. And so if we take those extraordinary items away, the performance of the company actually was very strong, and it was above the expectation. A little bit in line with what happened with other airlines, such as United Airlines, which also posted earnings better than analysts expected. And this also gives the impression that the US economy is performing quite well. There is a lot of demand for air tickets. And so basically that's why, even though during the tradings day, even before the markets opened, the stock went through a lot of volatility, and I can show this to you. This is the day in which the earnings were released, and so the stock went all the way down. This was when it opened. It opened at around 1278, and it closed at as you can see, actually it closes 1278 and open at 1318. But as you can see in the chart, it went also as low as 12.41, and also went as up as 13.63. And so a lot of volatility during this day, but apparently the markets ended up taking a quite good impression of the earnings, and so that's why the stock has been going slightly up over the remaining days. And but nonetheless, it's still a long way from the strike that we want to sell, which is $14. So we'll have to wait and see what happens next week. I'm going to still try to sell some puts on it to try to lower the average price, see what we can do now that earnings are out of the way, and see what we can do in order to try to sell these holdings without having a capital loss. And the rest of the week went normal as usual, but oddly enough, we ended up being assigned the Pfizer shares that we as a result of having sold the puts on Monday. And it was funny because the stock came down very, very progressively over the last few days, as you can see right here. Over the course of the trading week, it went progressively down and down, not by much, but came down, and then it ended up here. It ended up going simply, I should say, going up and down, very, very gently to the strike price that we set out, which was 28.50. And as you can see right here, the stock finished the day trading at exactly the strike price that we set out, and the put buyer apparently decided to exercise the put, and so I was forced to buy those shares, even though of course we bought it at exactly market price, with the difference that we were able to pocket the premium, which of course the put buyer have to pay us. So all in all, it was not a bad exchange at all. Basically, we had no loss on the trade, and we even have a slight gain in the form of the premium. But now we're gonna have to try to get rid of this, even though this is very good stock. I don't mind keeping it, but especially because the dividends are coming, and they are coming on November the 8th. Which is the date in which it goes into ex-dividend. So even if we sell these stocks after November the 8th, we'll still pocket the dividend. But this is not the focus of the strategy. The focus of our strategy, the wheel, is to basically sell puts until we are assigned, and then sell calls, try to sell the stock, and then repeat the process. So next week, I'm not sure what I'm going to do with these, if I'm going to sell the calls on it with a strike price of 28.50, the same as we did with the puts, the same strike price, or if we are going to the next one, which is going to be with a strike price of 29, trying to pocket a small capital gain. But this is something that I will have to see later, depending on how the markets open next week. But given the fact that we need all the buying power that we can get to make sure we continue to further our strategy and try to get rid of these stocks which are more problematic, I'm a bit more tempted to lower the strike price, trying to sell the calls at 28.50, breaking even on capital, and keep pocketing those premiums, because it will be easier for the stocks to be sold at that price than at 29. But this is it. Also, in terms of the calls that we had currently on board, that we currently have on our portfolio, as you can see, these ones are new ones. They expire next week, November the 1st. And why is that? Because as it became more and more apparent that American Airlines and Lyft would not reach the strike price, the respective strike price of these calls, they became almost worthless. The price came down to 1 cent, and so I decided to buy them back and roll over to the next week. And so, yeah, this is how things stand at the moment. I'm having a slight loss on this call, but this was because this rollover was done before the stock started recovering after earnings, but it's not a real problem. I would be glad to reach the 14 dollar strike price and be able to sell these, but yeah, we will have to see what happens. And also, because I was not able to buy additional stocks of SLOD at 87, we still have to contend with this 98 strike price, which and this call is going to expire at the end of next week. So we'll have to wait and see what happens. Now I'm going to sell more puts on SLOD for sure, try to lower the strike price as much as we can, but we'll have to see what happens because this is getting a lot of space in our portfolio. This is a quite big holding, and it would be very nice for us to try to get rid of this stock, even though of course it's a very good stock. It's pretty undervalued at this point in my view, but yeah, it's a very large holding, and I would rather sell it at break even. But yeah, this is it. This is how things stand at the moment, and this is how we are shaping up our portfolio for next week. Next week, intentionally, I'm not going to do anything about Ford because Ford will release its earnings on Tuesday after the trading day, and so let's wait and see what happens, because I'm afraid that there may be some large swings on the price, and so if we have puts sold at that time, we run the risk, if the stock comes crashing down, that we may having to buy the stock at a much higher price than the actual stock price after earnings. So we're going to wait and see what happens. We don't have because our current average price is 13.30 something, I believe. Yeah, 13.36. We are also very far away from this price, and so we are not able to sell any calls on that as well without taking a capital loss. So we'll have to wait and see, and basically see what happens. But let's move on, and let's fill up and complete our scorecard and see how the next week shapes up. So these are the trades that we input on Monday, and now here, as you can see, the next trades were on Thursday, October the 24th, because we bought back these calls on lift, and then we roll over to the next week, as you can see right here, and then we did the same thing with American Airlines also on the same day. So let's start with those here. And so let's finish this trade. Let's copy this one. This is 24th, the day before expiration, right? And we buy those back at 1 cent. Let's just see how much we paid in commission. So basically we paid $2.73, right? And this trade was closed, right? And we did the same thing here with lift, right? Here we also bought back at 1 cent. Now, and we paid in commission, let's see, 153 plus 238, so 238, 338, 288, it's 293. So 293, and this was closed. And as you can see, these returns were actually quite good, because we sold this which was basically almost a week trade, and the premiums that we had were good, quite good, and so that's why these returns ended up being, I would say, solid. Not amazing, but pretty solid. And now we have to also go ahead and do the same thing here, because we basically rolled over these trades, and so this one will expire also on November the 1st, right? This is American Airlines, this is Lyft, These are covered calls. Here, covered calls. This strike price is 14. This strike price is 14.50. These were 5 calls. These were 9. Right. Again, we need to copy this formula right here. Make sure we use the right collateral. This one will not need to be adjusted because we bought them all in one go, and this is actually the same price that we are trying to sell, the same price we tried to buy, so this is the same. And now let's see how much we collected in premiums. So for the lift, we managed to sell these puts at these calls at 12 cents, right? So the same as in here actually, and we managed to pay, so 144, so this 181, and this would be, if this was 80 cents, would be 261, so this is 260. And for the American Airlines, here we sold these at 6, so it's much less than we managed to get it before, so the return will not be as good nonetheless. So this is 473. This was actually quite hefty fees and commissions that we paid right here, but yeah, there's nothing we can do about it. So 473 and 773. If this was just 70, so this would be 843, 851. So this is 851. Now for the rest, all of these expired, and none of these trades were closed. So basically, as you can see right here, all our other puts except for the Pfizer were expired worthless. Now we have, and then we have to buy these 400 shares here of Pfizer, but the rest, Carnival company, Estée Lauder, and the Lyft puts, they all expire worthless. So we are going to fill this up here as well. All right, and these ones expired, and expired, and this one was assigned. I'm going to put here 0, and why is that? Because as you can see right here, we had to pay 28.50 for this stock, and the stock closed at 28.50. So basically we bought it at market price, so to speak. And so now what we need to do basically is to come here, and let's just let's use this one of these, because this one is not yet, this one is yet to be closed. So let's put this right here, see how much we can get out of the wheel strategy by turning completely the wheel on this stock. And so basically we had the acquisition price, the number of contracts times 100, this is correct, plus the premium that we received times the number of contracts times 100, less the commissions. And now we need to erase this because this doesn't concern to this trade, and this 271, which is the number of contracts times 100. All right, so this is it. All right, and predictably so, as you can see, because we receive a premium of 12, all right, which discounts to the price of the acquisition. So we acquired the stock at 28.50 minus the premium we received, so we would need to sell the stock at 28.38 to break even. Of course, since we are going to try to sell at least at 28.50, for sure, when we do that, we'll pocket a profit on that, even though if we break even on capital. But so far, this is it, and you can see here that the returns that we got this week were a little bit lower than last week, because these trades were all occurred, and they went down all the way up until the maturity of the option. So the trades, the time at which we had the positions open were longer, so the trades on an annualized basis had a lower return. But still, these are still quite good returns, and now we'll have to see what happens next week when we have the expiration of these covered call positions. But for the time being, this is it for next week. As I mentioned, American Airlines earnings are now out of the way, so we are going to sell for sure more puts on it, try to lower the average price. Estolode exactly the same, because we are quite a long way at this point from the strike price at which we want to sell the shares, at least. So it's because it's 98, prices are 87.20, so we are going to try to see if we can buy more shares of Estolode at a lower price to lower the average acquisition price. With Ford Motor Company, we're going to stay put because earnings are coming. We are also so no puts can be sold until earnings are released. We are also very far away from the strike price that we need to set up to sell the shares without having a capital loss. So Ford, we're going to all trades regarding Ford, we're going to stay put for now. And Lyft, of course, we will going for sure try to sell some puts and see what happens. Now the earnings for Lyft are going to come on November 6th, so we still have 2 weeks ahead of us to try and lower the average price and try to sell the stock. But it's going to be unlikely that we get rid of the entire holdings before the earnings. So we'll have to wait and see what happens. And of course, Pfizer, we are going to sell some calls on it. Whether the strike price is going to be the same, 28.50 or 29, it will remain to be seen, and that's a decision I'm going to make on Monday next week. So for the time, this is it. Feel free to leave your comments and suggestions below in the comment section. Also feel free to like the video and subscribe. I'm also available on LinkedIn in case you need to discuss this with me a little bit further. Send me a private message and we will engage in a conversation. So this is it. Wish you guys a very good weekend, and I'll see you all in the next one.